Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, November the 15th at approximately 9:30 a.m. Pacific Standard Time. I'm going to start here on the monthly SPX, so the cash index, on the maximum monthly chart that I have. The data goes back to 1925, so it's pretty expansive. But I want to start here in quick reviewing my long-term count for the S&P 500, and then also to bring into the conversation the differences between my count and other well-noted Elliott Titians, let's say. And so here we are. Now, I start again with the largest degree that's been available to me, and that is the Grand Supercycle. Now, I know there are other companies, there are other Elliotticians that use three additional above this on millennia and all these different cycles, which create a picture that would be like that suggests hundreds of years, thousands of years. And to me, it's like, well, what? It's great for the conversation, but to go back quite that far, I don't think is very useful. So I think Grand Supercycle in and of itself is useful, but not as useful as one would think because it's such a large cycle. And when we're talking about that, we're talking about a Grand Supercycle 5-wave pattern. It's particularly the one that we're in. If we're following it, it's Grand Supercycle Wave 3 that we're still in. And Grand Supercycle Wave 3 began in 1932. So we're approaching 100 years. And it won't be done at that 100-year mark. By 2032, it will not be done. It won't, in my opinion, will not even be close to being done. Now, there are other firms that are basically saying that what we're finishing up here at the top is a Grand Supercycle Wave 3. Now, I'm going to show you that is possible, but again, the importance is not really all, in my view, for what the market is confronting, what we're looking at coming in. So I'm going to show you the difference and how I can change a few numbers in terms of degree and still come up with the same answer of what's going to be coming forward. Okay, so here we have Grand Supercycle 1 and 2. I did not put them there. Those are where R.N. Elliott himself, in 1936 or in the 1940s, when he actually wrote all of his ideas down and put it together in a book, that Grand Supercycle was his top cycle, and he put 1 and 2 into place. So Grand Supercycle 1 finished in July of 1929. Grand Supercycle Wave 2 finished in 1932. Now, what it consisted was just the size of the drop, the size of the collapse. How much did the market lose in value? It lost 90% of its value in a crash that drove the country into the globe into a depression, which lasted for over a decade. So again, just thinking about the ramifications, what happened at that time. So now, really, if we were to think about something on that level, we'd have to come up to here and realize, okay, the SPX right now is trading closer to 6,900, and we have an estimate that it can go over 7,000. So you have to kind of think, it's like, well, if we were to have that type of a collapse in our market, as they did in 1929, what's that going to do for us? I mean, what does that suggest in terms of the drop that we're going to have if it's going to be a 90% drop? So let's just use 7,000, right? And now we're going to just take out the 90%. We're talking about that the market could lose 6,300 points and end up back at, well, just do the math, 600. Where is that? Right there. So again, is that going to create a depression? I don't know. I don't know. I think the ramifications are going to be pretty steep. But let's just go through this exercise. Let's just go through what I'm talking about here. So again, Grand Supercycle 1 and 2. Supercycle 1 and 2 also done. And then cycle 1 and 2 also done. So in my count, we're finishing up, we're getting ready to complete cycle wave 3. And so cycle wave 3, when it's done, will then ensue upon a cycle fourth wave. And that cycle fourth wave will consist of 3 waves, A, B, C, and they're going to be of the primary degree. So what we're looking for here is for cycle wave 4, where should it come down to? Well, as Elliott said, a fourth wave in motion should find its terminus within the price territory of the fourth wave of one lesser degree. So if I'm counting this up as a cycle degree, one lesser would be primary, and there's primary 4 right there. And that's why I have it in red. Now, going back to if I were to mark this higher as other companies are doing, as other analysts are doing, higher in terms of degree, I could then say, okay, so here's cycle 1, cycle 2. I could put cycle 3 there, cycle 4 there. That was a period of time, for those of you that don't really go in and look at it. The market was really, it fell into, it was a deflationary period. There was zip volume. There was just like the market just under its own weight and just inefficiency or whatever dropped. So again, could I consider that a cycle fourth wave? In a way, I probably could. So I could put cycle 3, cycle 4, cycle 5. And it was cycle 5 that actually extended. Cycle 3 did, but cycle 5 super extended. And if we look at the reasons why, that right about in here, right, that's the Gulf War, by the way. Nothing. That's the crash of 87. It's nothing. So we had that, and then here, and then what came out of that is the start of a very dynamic bull market. What took the index from the S&P from, let's just say, 300 to 1600. And so it's quite astounding. It was an incredible rally. So yes, I can put cycle 3, cycle 4, cycle 5 here, and then put supercycle wave 3 above it, supercycle wave 4 here, and then what does that put us into? Supercycle wave 5 going up. And then I'm going to have to count these all as larger, right? If this is supercycle wave 4 here, then what are we going up in? Cycle degree. This would be cycle 1, cycle 2, cycle 3, cycle 4 of within supercycle wave 5. And I just think, yeah, I guess you can do it, but I think I'm at a lower level. But guess what? Let's just walk it through. Supercycle, if we're looking here, that this is supercycle wave 3, supercycle wave 4, we're in supercycle wave 5. We have cycle 1, 2, 3, and 4. We're in cycle wave 5 up to complete supercycle wave 5. And then on top of that, we have grand supercycle wave 3. Now, so if these are supercycle here, so we have 1, 2, 3, 4, excuse me, we're finishing supercycle wave 3 up here, right? So if this is cycle 1, 3, 4, cycle 5, let me go back, confusing myself. Cycle 3, cycle 4, cycle 5, supercycle wave 3, supercycle wave 4, we're in supercycle wave 5 to finish grand supercycle wave 3. I don't need to state it out loud, but there are analysts out there that's exactly what they're putting up at this new top. In fact, they're already declaring it done. So Super cycle wave 3, which suggests we're in a super cycle wave 4. Where should it come back to? Super cycle wave that 4, and that's right here. So it's the same level. It's the same level that I have of where this corrective phase should come. They're just putting it on a different degree. So it really comes down to coming out of this. I'm going to leave it as is. I believe we're finishing cycle wave 3. It's the same diff in terms of what am I looking for? I'm looking for a cycle fourth wave, and it's going to come down to the exact same level that a grand super cycle fourth wave would do. Okay. So even if we get up to 7,500 in the SPX, I'm still expecting it to come into this territory, the previous fourth wave territory. And even if it's on a grand supercycle fourth wave, it's still going to be slated to come down into here. It's still going to look like a major collapse in the market. And it actually, if you do it just by the numbers, it is. So that's what we're confronting. I don't care the degree. Let's just look at the numbers. Let's just do the math. We're looking at a major correction of a longer term. Now, you want to talk grand supercycle, you want to talk cycle degree, it doesn't make any difference. We're looking at something that should take between, I'm going to say, 10 and 20 years. If we're going to do on a grand supercycle wave 3, well, that's taking us from 1932 to 2025. That's a long time versus 1949 to 2025. Still a long period of time. So you can do the math again to just put into Fibonacci time sequences how long it should take the market to correct. It's going to be a long period. And to sit and have the discussion of like, well, what's going to cause that? What's going to happen to the economy? What's going to happen to the globe? Many things that I can't put my finger on and say, well, that's going to cause it or that's going to cause it. The cause, I believe, is already out there. The cause can be aggravated by different things that are going to happen once it starts rolling. There are many things already in play that can contribute massively to a strong decline. Failures all along the line. So what really comes into play, and I think this is what all the analysts, whether it's me or whether it's a larger company, basically saying the same thing. Be prepared. Be prepared. Don't be hit blindsided. And how people can get blindsided is because they don't want to accept the reality. Now, the reality is if we're going to correct, what do you need to protect? Your investments, your money, your retirement, everything. Because if you leave it where many people do, you're just a sitting duck. So my goal here, as well as the day-to-day trading, is to just make it clear that this is what I think is going to be happening. Somebody could say, well, what's going to cause it? I don't see any reason. Well, look behind the curtain. That's the best I can tell you. Look behind the curtain. Many times we don't see, and I'm going to use some very, very old stuff. We don't see the forest through the trees. They're all lined up. They're all there. We just don't believe they can happen until they do. Now, I got to bring this up a lot lower level than here. This is just to show that that remains in play. And that, regardless of the degree that I'm counting it, it all points back to this area for the fourth wave that's coming. Whether it's a grand supercycle wave 4, a supercycle wave 4, or a cycle wave 4, they're all pointing back to the same area. So again, it's going to be the same set of facts, of givens, of market disruption that's going to create it. So let's just keep that in mind. So that's the area. Now I'm going to bring it down. I'm going to take it immediately down to my 5-year weekly. And that just shows, again, areas that I believe we're going to start the decline. So in my count, we're in intermediate wave 5 of primary wave 5 of cycle wave 3. And within that intermediate fifth wave, there are going to be 5 waves of minor degree. Again, those of you that follow Elliott, you know, they're building blocks. 1 degree, when it completes, creates the next degree higher, and so on until you get up to that grand supercycle, because that's the highest degree. There's one other company that now has designed and put out 3 additional levels up there above grand supercycle. So it's like, okay, whatever. So in my book, I'm sticking with what I got. And so I'm looking at intermediate wave 5. And there's one in minor degree, there'd be 5 of them. So here's minor 1, 2, 3, and 4. Minor 4 bottomed in April of this year. April the 7th of 2025, minor wave 4 completed. So what we're in is minor wave 5 of intermediate 5 of primary 5 of cycle 3. Now, within minor wave 5, we're going to have 5 waves of minute degree, of which 1, 2, 3, and 4 are complete. Now, this is where it gets tricky and different in my count versus everybody else. And I want to show you why. Now, I'm a stickler for the rules. Now, here we are. I'm going to bring it down. I'm going to bring it all the way down to the daily, because what I want to look at is this minor fifth wave, which consists of that 5 waves of minute degree, of which we have 1, 2, 3, and 4 complete, and we're in minute wave 5. Here's where the big difference comes in. There are others that are saying that, and again, depending on the degree, because of mine, I'm counting it on a minute, others are counting it a much higher degree, that I'm putting minute wave 5 still in progress. Now I'm going to bring it down to my hourly chart. Now we're inside this minute wave 5. And I am under the count that minute wave 5 is finishing in a ending fifth wave diagonal, expanding diagonal within this position of fifth wave position. So what will be consistent or what will this fifth wave consist of? It's still going to be 5 waves labeled 1, 2, 3, 4, and 5, but every single one of them will be a 3-wave structure. So here we have wave 1, 3 waves, wave 2, 3 waves, wave 3, 3 waves, wave 4, 3 waves. Big because it's expanding. What does that mean? That, well, just to tell you the rules that are set up for an expanding triangle. Wave 4 must overlap wave 1. Wave 4 cannot break below the endpoint of wave 2. We can't forget that a wave 4 is still correcting a 4th wave, but it's an expanding triangle. So therefore, it's going to dip a lot deeper. It's not going to be a small wave. It's going to skunk wave 2. And it did in time and in length. In fact, I pushed it out because of what the market did, and which, again, I'm going to explain to what was really behind all of this. And that was gamma, options trading, and markets getting ready for expiration and dealing with the expiration. And so therefore, they're not taking, when we get confronted with that, we have to sit there and look at the numbers, period. Just look at the numbers, because that's what's going to be happening. It has nothing to do with the economy. It has nothing to do with being bullish or bearish. It has everything to do with where's the position and what is going to happen when they decide to come in and monetize one side or the other. And don't forget, we have investors, we have dealers. The dealers are the ones that are actually making the market for all of the trades. And they're also the ones that's like it's sitting out there now trying to determine, okay, what's going to happen here and what is their exposure. So twice now, last week, which was a Friday expiration, and this week, which was a Friday expiration, both basically started with a gap. And that was how it began and how what resulted was monetizing to the downside. And I can show it, except that they're gone now. I don't think I can actually go in there. Let me just see if it's I think they've cleared it. Yeah, see, it's November 17th, so I can't go back and look at it. But you can go in and you can see that if we're looking at, and I did talk about it yesterday, and I showed it in the intraday alert, how traders, and I was saying it was the dealers, took the market lower, monetized the put positions they had, and at the same time monetized call positions that they had, I believe reversed them, and then ran the market back up. Now, we can just now look at this and then just let's put other numbers in there. Let's put the gamma levels in there. Let's talk about what the nominal value of those options positions created in terms of gamma. So we look at and we find for options trading and also trading in the futures market and also just trading in the individual stocks, all of our underlying companies have options that trade. The larger the company, the more popular the options, i.e. NVIDIA, Microsoft, Meta, Google, Amazon, Broadcom, et cetera, et cetera. And because of the tremendous growth in terms of price of the underlying, of the indexes, that we're talking about trillions of dollars. Now, let's add one more thing into here. What truly keeps our market going, and something that I talk about often that's very important for just trading, is the amount of money that swirls around and gets traded each day. The amount of money that gets pulled and corrected or whatever at that expiration. And that's what I want to talk about. If we look at those positions, you can put a nominal value on them. And so what happened is that in the morning, as we started to go down, it revealed a $4 billion, this is just in the SPX, folks, a $4 billion positive or 4 billion positive delta. So you're going to need to make some changes. You're going to need to make some trades. You're going to need to trade that. And they did. And so that's monetizing one side and the other side. And then suddenly then the market, that bullish flow pushed the market back up. And it was actually driven by non-zero DTE put sellers. So that's what we're being told. And call buyers. So that pushed the market up off that low within the first 2.5 hours. So once that was created, what the result was is that we now had, at about noon Eastern, we had a negative 5 billion in negative delta. $5 billion. That's a lot of money. And what happened? Market continued to rally. That all got monetized again, and boom. So after that, the selling, it dragged, that reversal then reached a peak, and then the market started to come back down. Again, monetizing. Again, expiration. So because all these options are going to expire. So think about how many strikes they went through on the way down. So basically, we're just looking at this low was 66.40, I'm going to say 47. So basically, if you're looking at the options, you can go down to the 66.40, 66.30, whatever, all of the strikes going all the way down. So, and because the bigger one that got rolled around were even further down. So they make that switch, they run it back up. Now they need to adjust again. Now they need to get ready for the expiration that's going to be happening at 4 p.m. Eastern. Now, when the bell rings, options are done. Stocks are going to continue to trade. Index continues to trade, not this cash index, but the future continues to trade. And that's just making getting everything delta neutral because everything expires and all those positions expire. So that gamma goes away. So that's just a product of the trading. That's just a product of this is what happens when you have an option expire. So it has no more, doesn't have any value. It's either in the money, out of the money, or at the money. So they expire. And then the money changes hands. And then we're off to the races starting on Monday. Again, we're going to do it again. Now, next Friday is the November monthly. So it should even be a little bit larger, right? Because there's a lot of people that they function on that monthly expiration versus a weekly versus a daily. And that's what we saw going on, right? Non-zero DTE, 0 days to expiration, which had been Friday's expiration. It suddenly turned to the 21st, the monthly. And so there was a lot of changes going into that, a lot of rolling again that they had to as a part of getting ready for Friday's expiration. What you didn't want or what you wanted to carry forward, you roll it out. And that's what they saw happen. So, and then we had all this negative delta that needed to get dealt with as the market then dropped back down. So it may be hard to really understand, but that's what happened on Friday, and that's what happened the previous Friday. Now, how that fits into the Elliott count is we continue to have our levels. Now, yes, it extended further than I thought. Yes, I had initially marked this as wave 4, and this would be the start. And I actually labeled this as wave A of minuet wave 5 going up. But then we got that. And to tell you the truth, I could possibly leave it there because you see here, it did not break below. And in fact, if I just take it and I put this on a line chart, look at the difference. So I could put this 4, still leave it right there. And this could be wave A, and this is wave B, except here's why I didn't do that. It is a 5 wave down, although I could say A, B, 1, 2, 3, 4, 5, C. So it's either way, but I'm kind of thinking that it was more likely 5 waves down, making it a C wave versus a B wave, right? I know letters and just trying to understand what that is. So if we're here and I put the 4 there, then what we're doing is minuet wave 5. Now we're in a triangle pattern. So wave 5 is also going to show up as an ABC. And I had this as 5 waves up, so wave A. And then this would have been 3 waves down as wave B. And it still could be. But I tend to run the S&P 500 and the NASDAQ 100 under the same count. And the reason behind that is because of the top 10 stocks that control the moves within are tech. And so they're the top 10 in the S&P and they're the top 10 in the NASDAQ. So the NASDAQ did break below that low. Didn't take out this low, which was important, but it did break below this low. So that's why I shifted the 4 over. And you'll see it in the NASDAQ if you actually go and watch that when I publish it. So back to here. Now, here's what I also want to add here. There are other companies, other analysts that are marking this high as the completion point all the way up to, I believe, its grand supercycle wave 3. If not, then let's just say supercycle wave 3. And I find, and then counting this as wave 1 down. Now, this is where I start to have a problem. And I'm going to show you why. Because they have to say 1, 2, 3, 4. Do you see how this is? Wave 4 overlaps wave 1. And I don't care what style you put it in. If I take out the fluff and I put it in here, it still overlaps wave 1. There's the top and there's the bottom. So I'm like, okay, I'm not sure why they're leaving that like that or why they're accepting it. So, and the tiniest of fifth waves here to produce this. Now, yep, I absolutely get, and I talked about it when it happened. Gap, gap, gap. First gap, middle gap, exhaustion gap. And it fit perfectly because you see what happened, and it just kind of nosedived. So, but really what's in control of our market, folks, is truly right now options trading. And options trading involves different levels, different things, like what I talk about so often, and every day I talk about it. I talk about our gamma levels. And those produce, and you can get these numbers because they're also the same in all of the underlying stocks. So we can go look at NVIDIA and we can determine, okay, here's the call wall, here's the put wall, here's the hedge wall, here's all the different things that affect how a market moves. So with all of that in mind, I think it's just incredible that we look at these things and realize that this is real and it's what's moving the market. And it actually does produce solid Elliott. So again, within my count, and when they get compared to others that are solidly, we're going down, the top has been reached. And I get it. Then if that's the case, you're going to have to say, there's the 5, and here's wave 1, here's wave 2, and we're down. That's 1 of 3, 2 of 3, and we're ready for the world to collapse. Now, I want to show you that actually has to stay as an alternate count for me. It has to. Why? Because the possibility exists. If the market finds more reason to just start to tumble, then it comes through here as well. And therefore it's like, wow, what do we do? What do we do from here? So again, I think we use all of the tools, and the tools are preferred count, alternate count. So again, my preferred count continues to show that we should begin to rally again. And I just want to put this in so we have that here as well. And I apologize because I always try to remember to be totally prepared and have all my fib levels in. So let's just kind of do that now. And then we discuss it. So this would be for minuet wave 5, which is going to come up in 5 waves. Now, I'm going to have to include all of that. So here we have it. So 100% where wave 5 would be equal to wave 1. Well, it comes in at 68.22. Okay, that's not a new high. That's what we're looking for. So we also have a conversation that people are presenting to me, is the possibility that this is wave 5, and it did end in a failure. Because I tell you what, I can count this as 5 up. So I am going to say, yeah, I'd have to consider that. Yes, it could be. And then what does that suggest? Well, I got 1, 2, 3, 4, 5. I got 5 down. If I have 2 up, maybe I got one more little rally up. And if we can't get past that, and then we start to drop, then it truly can be the 5 goes here. It's a failure. But let me tell you that it would go all the way up. Now, this actually would fit cleaner for me to be honest with you, because I put that 4 back over here and the 5 goes there and it's a failure. And here's what stays clean. I'm not counting this as 5. It gets counted as an ABC down, which is what it was, because I'm paying attention to the rules that Elliott left for us. And those rules are that wave 4 cannot overlap wave 1, except in the case of an expanding triangle pattern in the 5th wave ending diagonal. Then it has to overlap. Why? Because it's going to form the expansion, the boundaries for the expanding triangle. Now, having said that, does that mean that wave 5 can't fail? No, it does not. So even in here, I believe I can consider wave 5, if it turns out to be that, complete here. And that would be my alternate. And if that's the case, folks, well, then I need to take it out and I need to start putting in much larger fibs to start to indicate where we can come down to. The first one that I likely would do is come down from here, right, to this. And I move it up to, let me see, how would I put this in? I would actually just take it. Let's just do a straight fibs coming down, retracement. So I'm going to put it there. That's where wave 5 supposedly would be, right? So here we have coming off first. These are all support levels that we're going to be looking for as this starts to develop inside. Now I'm going to bring it all the way back down. Let me bring it back down to here. So what we're looking at, there's our endpoint. And now we're going to start to look to count 5 down. So if that's the endpoint for 5, this is going to be wave 1 coming down, right? So then we have wave 2 going up. Those would actually not necessarily fit that way. So here we have to fit a few different ones. And I know I'm clogging the chart, but unfortunately, that's kind of how it goes right now. So let me just show you. We've already come up to almost a 618. So could that be done for a small 2? It could. If not, maybe we come back up to that level. Maybe we get up to 68, 21, 22. And then finish the wave 2. If this is 1, this is 2. And then what we're doing, we're coming down in a third. And it's going to be wicked. And it's going to be hard. And it's going to be fast. So how are we going to know? Well, we might get up there. And then when it starts to come down, it's just going to start to break. Now, I won't have them until Monday morning, but we'll also have additional levels coming out of expiration. Gamma levels get reset, right? We're moving out to the next week. Where's the gamma sitting? We'll know. Where's our volatility trigger? Where's our call walls and put walls? We'll see what happened. We'll see where the differences are. And then if we're going to drop in a third wave, I'd be looking for them to come down and break volatility triggers, call walls. Actually, not the call walls, but the put walls. And other major levels where gamma is sitting. And I have to say, in the SPX, what's really grounded right now, that remains grounded, is 6,000. I know, the silence is deafening, right? 6,000. And what this suggests is that we could start to drop, and we could start to drop hard. So there has to be something in my mind that's going to shake the core, right? Shake the core belief in the market. And there are many things out there, and I'm not going to speculate, but that's what I believe it has to be. And not that it necessarily has to present itself quickly, but you have to believe that there's something behind that change. There's something behind that the market is deciding no way. As much as we're now behind waiting for NVIDIA's earnings. For all I know, folks, NVIDIA's earnings come out on Wednesday. That could be the day. That's only 3 days into the week, right? What if something really, and I don't want to say the what if, because then it's just this speculation. But we're looking at it. What would be the catalyst? What would be the enzyme that's going to turn this market on a dime and flip it lower? That would be one. Any type of a news from that could affect the economy. We're going to start getting our numbers back too, folks, right? Government has been reopened. We should have the Bureau of Labor Statistics starting to spit out things like me wheat, so to speak. Just like, boom, here they are, here they are, here we are. And they're making up now for lost time. I don't know. I don't know if what they should be reporting for past months is all going to come out in one big batch, or is it going to come out as we go through for the month, current month, right? So last Thursday and Friday, we should have had CPI and PPI. We didn't have either one. We should have had initial jobless claims. We haven't had that for weeks. We should have unemployment numbers. We don't know. We don't have any of it. So when we start getting that alone could drive things. Right? Like bull market, you're done. And we're moving. So that's when I'm showing you what we have. I'm showing you that we have that potential. And here's how. And because I am looking for a completion point for a very large top. Now, the algorithms continue to suggest and continue, although I won't get them updated until tomorrow, in terms of what's the probability? What's the probability of the SPX, or even this? We'll go with the spiders because that's where I actually do a lot of that work. It's in the spiders. What's the probability of the spiders getting to 700? What's the probability of the spiders getting to 730, 750, 760? These are these upper levels in the spiders that are equivalent in our market to 7106, 7200, 74, 75, 76. These are all valid levels. Now, I'm just going to go over these with you. Let me pull this back out. Let's go back out to the daily. I hate all those lines. On the daily, right, we have that is for the minute fifth wave. So that 100%, where minute wave 5 would be equal to minute wave 1, which was that big rally, at 7198 or 7200. We have minuet wave 5 coming in at 6930, right? That barely takes us, I don't think it takes us to a new high. But 2.618 takes us to 7107. That is a new all-time high. And that could be where minuet wave 5 completes. And we're just sitting right under the 100% marker. Now, if we go flying through that, same token, if NVIDIA reports crap or NVIDIA reports blow the doors off earnings or superior forward guidance, well, then I think we can go blasting through that. Well, what's up next? Well, this is for the minor fifth wave. And 4.236 is its next level. So what does that mean? That means that we've already exceeded 100%, 1.618, 2.618, and the next level is 4.236. And that, folks, is just doing the math. On a Fibonacci basis, is just doing the math to get that to that level. But that level represents, because we've already gone through 100 and 1.618 and 2.618, that's our next level. 7478 or 7480 or 7500. Now, congruent with that would be if we get a blow off type top in motion, then we have minute wave 5 can come in at 1.618. If it exceeds that, that's its next level. Does that mean that's where it needs to go? No, it doesn't. It just is. This is where the market could go if we're working on a Fibonacci basis, which we do. But what happens if it gets only up to here? Is it then going to be kind of completed? It's like, of course it can. And again, there's a new all-time high. We're between levels. Possibly once this fifth wave is in motion, We'll be able to then add fibs to it that might point to a little bit higher. But to think that, oh, it has to go here, no, it doesn't have to do anything. But we will be looking, if it gets above this, we'll be looking to next levels, and we'll have more because the market will have traded out that much. Let me go back down. The market will have traded out. Again, if we're going up, this could be 1, 2, we're getting a third, which should be powerful. Again, should take us above that, should take us above that in the third. Because we can run a fib going up. 68.54, oh look, 69.33. And that takes us to new all-time highs. And basically it's just a third wave. Just a third wave. And we have one above that. And these are not that they're impossible levels. They're just showing you what the fibs are, and that's just doing the math. Now remember, you hear me talking about that now. So really, I'm not so fixed on who's bullish and who's bearish and why. I'm now working on math, a mathematical basis, which I've always done. Right? What is Fibonacci? It's a number sequence. How do you get those Fibonacci levels? By doing the math. Right? Multiplication. And to exactly what it is. If the whole number sequence is starting from 0 and 1, and you add it together, and so it's 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, because what we're doing is we're taking one number and adding it to the previous, and that gives you the next level. So when you're looking at Fibonacci levels, in terms of like 100%, 1.618, 2.618, you're just taking that same thing. How does it begin? 1.432 or something like that. And then you take the next one up and you multiply them. And that gives you your next level. Or so 0.146. And then from that, when you're multiplying that out, becomes 0.382. When you multiply those, then it gets 0.5. And you multiply the next one, 0.618. And you can keep multiplying, and then suddenly 618 turns into 764 or 786, to be honest. And then you get 100% or 1%. And then you start adding, and then you have 1.382, 1.618, et cetera. And that can go to infinity. So what I've chosen now is to use, and it was all done by a particular analyst, which just reinstating it. So when we're looking at a larger move, you have 100%, 1.618, 2.618, not 3.618, which I was using for a while. It's like it jumps to 4.236, and then it jumps to 6.089, I believe, and then it jumps to 11%. And that 11%, it's 11 points. Actually, it's 6.54 something, and then it's 11.089. And those are pretty high. That can get up there. But these moves are producing giant moves like that. So the other ones, I have 2.618, but I don't think I have 4.236. Look at that number. And that's on the minute level. So minute wave 5. 4.236 is 92.96. What do we think it's going to take to get the market that high? So when you hear people talk at these levels, it's like they're just doing the math. But the reality is, do I think the market can get there? Currently, no. I don't, because I don't think we're economically structured to do it. That's just saying that there's no pullbacks, that we just continue to churn forward, that all of our market, the companies, all just continue to have great earnings. They continue to just get fed. They continue to produce the revenue to support it. Well, that means your economy has to be running on all cylinders, that everything has to be all tidy and just all neat, that all your trade partners, everything is running smoothly around the globe. And we know better. right? We know better. It's not happening. So again, day by day. So why am I saying all of this now? Because I'm saying I'm following the math. Now I'm going to tell you that, yes, this might be my preferred, and that's what I'm looking for is an upside move. And I've got levels to do it, to show what the path may look like. So now, again, what's my alternate right now? I don't like the alternate where I'm putting that completion point there. I do prefer and will use the alternate that this 4 comes back here and this 5 up was minuet wave 5 and failed. Now, can I do it in an ABC and call it wave 5? I can. And still, it would be a failure. And then what would that suggest? This is wave 1 coming down. If this is minuet 5, trust me. Okay, follow this now. If it's a failure, minuet wave 5, minute wave 5, minor wave 5, intermediate wave 5, primary wave 5, cycle wave 3. Everything goes here. And it's on a cycle level, it's not that big of a failure. On a minuet level, it's pretty sizable. This is 69.20. This is 68.50. $70, 70 S&P bucks. Not the end of the world when I'm looking at something like this. Definitely not the end of the world. So, what's 50 bucks between friends? So again, that would be my alternate now for the S&P. That this ends in a failure and the 4 goes back there. Excuse me, the 4 goes back there and the 5 goes there. How are we going to know? This will tell us. This will be, if we break higher and can contain it, and not contain it, sustain it, then I'm looking for those higher levels. If we break 69.31, which is breaking above that fib level, I'm pretty much going to count that as like we're in third going up. That this is 4 and this is 1 and this is 2 and we're now in the third. Or again, remember it has to be an ABC, which I think the A wave can be 5. 3, 4, 5. We'll get up to there, the 5, and I can put an A wave there. We pull back and then we do a C wave up. We're definitely looking at these upper levels then, folks. Now, I'm not going to have the conversation, although we can speculate till the cows come home on what's going to push it there. Well, the first thing people are going to talk about is that, they still got the rumor that the Fed's going to cut again in December. Well, that rumor's going to get squashed a little bit because we got the Fed governors and the Fed people out talking this past week and probably next week. They're going to be talking about the fact, no, they need to see this data that's not been being reported. Now, to me, it's like, you know what? You know the data. They just want to see it put out there before they make a decision. So again, here we are. I can't believe that they don't have access to the Fed data because they have to be doing it themselves. Within the Federal Reserve, they're collecting the same data. Anyway, here we are. So preferred count, minuet wave 4, we're starting minuet wave 5. We should go break 7,000 under this count and finish all the way up to that cycle wave 3. The alternate is that wave 4 goes back over there, wave 5 ends in a failure. And that all the way up to cycle 3. And this is wave 1 of the new cycle going down. Don't forget that if cycle wave 3 is ending there, then we're having a cycle degree 4th wave, and it's going to consist of primary degree A, B, C. And so if we're in primary wave A going down, the first up is going to be likely 5 waves down of intermediate degree. And so we got to just keep going down the ladder. Is this minuet wave 1 of minute wave one, of minor wave one, of intermediate wave one, right? Of that primary A. So a lot of room to go down. So, but again, we're going to have to start somewhere, and it's going to start with a wave one, a wave two, and a wave three, and a four, and a five. No matter what, I'm going to be looking for 5 waves down, and what a better place to look for it than in the cash, 5 waves down in the cash to signal the upside's done. And if it's a failure, we should do it quicker. Okay, so that's that. Let me just go over and let's update the ES quickly. All the same facts stay in place, except that recovery was much sweeter in the future than it was in the cash. Cash is cash. And as they say, cash is king. But here, the 3, the A, the B, the C for wave 4, again, did not come down, and it did actually, just by a small amount, produce a new low over the A wave. But what it didn't do is it did not come down and break that. It was miles away, actually. So it keeps it in that expanding position. And then it really launched up and off of that, which I thought was very impressive and very productive. But the same deal. Monetize, 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 finish, monetize, 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 finish, monetize. All to do with the expiration. Just like here. Except here, they just took it up. They didn't bother to do any more. So again, if that is 5, it's going to take it all the way up to cycle 3. And at 6,900, and that is 69.54. So again, about a $54 difference. No big deal. It's very acceptable. If that is the alternate, is that this is minuet 4 goes over there, minuet 5 goes here, and we stack it. So minuet 5, minute 5, minor 5, intermediate 5, primary 5, cycle 3. And it's done. Wave 1 down. Much cleaner there, right? Wave 1 down, 2 forming, A, B, C. So we actually can run just to see where we think this might come in on Monday. Where we have it, can get all the way back up to there. If we're looking for A, B, and we're looking for C wave, 68.25 would be my minimum. So we have 68.26, 68.50, and 68.72 to be a wave 2. Cannot take that out. But it can, 618 to 100%, definitely can do that. So, but 68.25, sure, that would work. And that's where, the C wave would be 62% of the A wave. But we also have out there, if I take this back off, we have 4 wave 5, but also 68.15. It's just 618 coming back up. But that's on a different type of a measurement, but it should provide some support, and it might complete a small ABC up, a wave 2. And so let me just take this down to the 15-minute, look inside of it. Yeah, kind of to me, it's 1, 2, 3, 4, 5, A, B, C. That's pretty clean. So I'm going to say A, B, and we got a C wave if this is a wave 2, or it's 1, 2, and we have a third. So it's going to be interesting because it's going to help determine what all of this outside is. If we fail up here and we come flying back down, then we know this goes over here and this is going to turn into the failure point. Because then this is just 5 waves down and I'm putting a C on it. So it works up to there, unless it comes back down and breaks it again. Then it's a 1, a 2, and coming down. Or if it's going to stick there, it's a 1, a 2 going up on the internal. This would be 1 going down, 2 coming back up to retrace, and then 3 going down, which would be savage. Which third wave's longest, strongest, panic, all of the above. Third wave going up, euphoria. Whew, we made it through all of that. We're back on track. Now, again, I'm not a stubborn bull. I'm just doing the math. I'm doing the numbers. I'm reading what the algorithms, which are also doing the numbers, doing the math, and the probability. The probability remains fairly high for these indexes, particularly the S&P and the spiders, to get above 700 or 730 or even 750 in the spiders, and that would equate over here in the S&P to 7,000, 7,200, 7,500. So and are they possible? Yeah, we've shown it over and over again. They are possible. They've been there for a long time. They remain there. At 72, here's 7,000. Here's 75 to 77. And again, you see the math. All right, so everything's in alignment. Now it's up to what happens, right? It's up to the market. And again, when I'm going to deal with the market, I'm also adding in options trading. Gamma. Please try to understand and just get in. Yes, there's a lot of retail business in options. And if they think like NVIDIA is going to go up, they're going to try to buy a call to make money on the call. But understand that there are dealers and other traders that are much more sophisticated in the options positions that they're putting on. And they're doing it for various reasons. Same objective, folks, is to make money or protect a position, right? A larger position that's sitting maybe in the stock or sitting more somewhere else. So again, there are a lot of reasons that the options trade, but they have a lot of control because of the gamma that's created in that position, whether that position is long calls, long puts, long short puts, that combined creates a positive or negative flow in gamma, which produces a negative or positive flow in the delta, which then suggests what happens to your option with a $1 move in the underlying. And so if you have positive delta, it's going to be a positive response. If the market goes up, you're going to make money. If it's a positive delta and the market goes down, you're going to lose money. Same deal. If you are short the puts, you're going to end up with positive gamma. And if the market drops, you're not getting shorter, you're getting longer. If you're long the put, it's negative gamma. And as the market goes lower, you're going to get shorter. Works great. A positive gamma, whatever. It's like if it works in favor for you, but when it works against you, then you got to make an adjustment to your position. And that's what creates the bigger moves. Put wall, when it gets broken, it's because they're short puts. And every time the market drops, you're just getting longer, not shorter. You're getting longer. So you're losing money. All right, enough talk about that. I'm going to wrap this up. It's actually been almost an hour. Wow. All right, so I thank you for sticking around if you're still listening, and I'm hoping this is going to be a little bit more information as we move through this final stage, and just put into perspective, going all the way out to these charts to where we see this. It's the degree doesn't matter, folks. Hopefully, what you're taking away here is that whether I'm counting it as a cycle a third wave, or whether I'm going to count it as a super cycle third wave, or a grand super cycle third wave, or a cycle fifth wave, it's going to come up with the same place where the market should return back to over time. And now let's talk about how many years. This is 16 years. It's not going to take 1 or 2 or 3 or 4 years to complete it. It's going to take a lot longer. That's why I have those in there. Those are just points to where the different degrees should come into play. Okay. And we'll have more of that as we get started. All right. Thanks again. The next update will be Monday morning. And that's where we'll update gamma levels. And that is for members only within the YouTube channel.